Excellent. I'd like to extend a special welcome and thanks to our guests for this webinar. And I would also like to thank the German Chamber of Commerce for making this event a reality. Thank you very much, everybody, for joining on such a cold day. If you're in Lusaka, it's very, very cold. I've got my cup of tea and my hot water bottle and all sorts of things to keep me warm. And yeah, let me just share my screen and then we can get this show on the road. Well, okay, so just as to a guide for the format of the webinar, we're going to have multiple presenters. Therefore, if something goes wrong, you know, with these webinars, the internet connection drops off or you can't hear me or something of that sort, please let us know. The chat box should be active for everybody. And any contributions or questions that you might have, if you don't want to wait until the Q&A section, you can post them in the text box or the chat box, and somebody will either answer you right away or we will wait for the Q&A section to address that. So the webinar is being recorded, and my estimate is that we're going to be here for something like maybe 1.25 hours. So please make sure that you have a warm mug and stay warm as we go through this webinar. For such a serious topic on such a day, we're going to have to be as interactive as possible so that you can take something away from here. Of course, like I mentioned, we would take questions from you at the end of the webinar in an interactive fashion, or you can post your questions as the webinar progresses. So just something about us as SADO to start off with. We're a technology company that focuses on transformation of organizations, which is digital transformation. And we like to look at the human element in it all, just so that we're not just a tech company. We're really a business consulting company that includes tech in it. And we try to be a technology partner to businesses. So a few numbers you can see on your screen is that we have over 6,000 people that work for the organization globally. Although we're sort of divided in regions, but in total we're over 6,000 people that work in the business, and we're present in close to 40 countries. In Zambia specifically, we've been around since 2017, and we've got sales and technical staff on the ground. Just in case you're wondering where all the support comes from, we have people on the ground. And we tend to attract people from manufacturing, wholesale and distribution, and also transportation and logistics verticals. But we do implement our systems in all sorts of industries. Right, so for today, our partners in this webinar are the German Chamber of Commerce and Industry, and they have been very instrumental in organizing this webinar for members, as well as the Zambia Revenue Authority, who is the regulator and who's the implementation organization for fiscalization, which we're here to talk about. So they're here as well today to present, as well as to address any questions or concerns. Of course, our major partner in this undertaking is SAP. This is the organization that builds the software that we sell as SADO all over the world. So they've got multiple different software products that they sell, and we represent that and support those products. Right, there's quite a number of familiar names in the webinar that I've seen today. So I know some people in here, but there's also a number of new people that we're not familiar with. So for the benefit of the people that may not know us, we'll just go through some introductions of who's going to present today. Today, we're going to have Mwaziwa Nankonde, who's a consultant with SAIDO Zambia, and she's been very instrumental in the development of the fiscalization integration that we have done with ZRA. So she's going to demo some things for us today. It's not just going to be me. And then for me, I am the MD for SAIDO Zambia, and I have been in the operations and supply chain space for, well, close to 20 years now. I'm also a pre-sales engineer who is a person that sits between technical implementers and the business side from the clients. Okay, so we're not just technical people, we're not just techies, and in today's session as well, we're here to present, particularly from a business angle, from a business side of things. We have as well in our midst the ZRA fiscalization team, and there's a number of people that are joining us today. So these are really subject matter experts for this. If you have any burning questions, particularly as it relates to fiscalization and how to implement, the team is here today, and they're also going to present for us. Okay. So who is this webinar for? We've got to make sure that we get that clear, because you might be in the wrong room. So instead of wasting anybody's time, the aim for this webinar is obviously to look at this fiscalization mandate that came through the VAT Act. And this act, I think, was first amended in 2015 to include fiscalization. So it's been around for a while. And then over the years, it's been updated and enhanced to follow the environment. And so I know that a lot of people know the theory of fiscalization. You know about how it's done. You've been told about how to execute it, but many times you haven't actually seen a system that is implemented doing the fiscalization. So we want to go a little bit further today and do two things from what you know. You already know about the theory of fiscalization, but today you will also hopefully take away from this session a bit of a methodology for how to implement fiscalization in your own company, and as well as just see a system in action, a system that has been approved for fiscalization working. So we're going to show you that as well. So hopefully we're all going to learn something today, and ultimately this webinar is about having a full circle understanding of how to approach this entire fiscalization topic. So the intended audience, of course, is people who are in decision-making or influencing positions, particularly as it pertains to accounting systems or finance systems. So finance managers, accountants, IT managers that might be supporting these systems, as well as decision makers. So this is not meant to be a training session for all the technical gory details about how to connect to the revenue authority. However, it's meant to give us a good understanding of how to execute from a business standpoint. One other thing that you would need to know is that you don't have to be using the software that we are using, which is called SAP Business One. You're going to see a little later. We're only using that because that is the software we sell and implement and support. So, and this is the solution that we have used. In any case, whatever principles we used in there should be able to be used as well in your own accounting system and or your own point of sale system. So we're going to show you how SAIDO implemented this and how it works with SAP Business One. Right, this fiscalization mandate is basically about getting all VAT registered suppliers to use what are called electronic fiscal devices, and we're going to define that a little later, and that might also be addressed by the ZRA team. But it requires all VAT registered suppliers, all suppliers that are registered for tourism levy or insurance levy, to use these EFDs for all their sales transactions. Of course, this scope is changing a little, and in future, I think it will require all taxpayers to use EFDs regardless of what kind of taxes that they are registered for. And there's a little line there showing you that you get a little more than a slap on the wrist for violating this mandate. And I'm sure there's various ways for doing this, but you really want to be in compliance and not have to battle with prison terms or penalty units. Now, just a little schematic about how things are happening now. If you're in this webinar, chances are you don't yet have fiscalization working in your company. So this is just a little pretty drawing to set our minds as to how things are happening now in the business or how things have been happening before fiscalization. So at present, you have accountants at the end of the month who prepare these VAT returns, get into your accounting system, and from your sales invoices and purchase invoices and similar transactions, your accounting system is producing output VAT and input VAT reports. These ones are consolidated usually by an accountant in your business to create a VAT return in a specific format as prescribed by the ZRA's Tax Online website. And then it's uploaded. The accountant uploads this and Bob's your uncle. Okay, so this is the old way of doing things. And I think we're going to see after ZRA's presentation how that transforms now into a new way of doing things once you have migrated to fiscalization. Of course, that whatever has been done with fiscalization is an automation and therefore an enhancement of how things used to be. And so this is really going to replace all the manual steps of creating a VAT return. Okay, so that means that it will give more time to accountants and people who are responsible for doing this to do other things. Okay, so the new approach is for real-time reporting of sales activities. Just keep in mind, Zambia is not the only country implementing this. Fiscalization has been around for a long time globally. And there's countries, I think like Greece and Italy, that go back to the late 80s when they started it. In Africa, there's a big trend of getting sales transactions linked to the receiver of taxes. And countries like Zimbabwe and Tanzania and Kenya, they've all done it. So I don't think it's something that is going away. Okay, so at this stage, I'm going to introduce and hand over to Mr. William Mwango from the ZRA to take us through their presentation, and then you are going to hear from me back in a little while. So, Mr. Walia, you can share your screen. Take the stage.
Thank you, Mr. and good afternoon, everyone. In fact, the person presenting is Zakataya, so I hand over to Zakataya. Thank you.
Okay, good afternoon, everybody. We don't know where maybe some people this time it is in the morning, others it's in the evening, but in Zambia here it is in the afternoon. Yes, this one is a very short presentation to try to be very precise so that at least people can pick one or two things. Like the MD has said, if you need any further clarifications, we are here to take some questions and respond to the issues. So the outline of the presentation is as it is shown. I'll just briefly talk about the introduction, then also provide the available fiscalization options that the ZRA is offering at the moment. Then we also have another counterpart from ZRA who will talk about the accounting package approval, which is a requirement. And then we will also briefly just say what penalties are available or are there for those taxpayers that are not compliant with this requirement. And then one or two things that we we are expecting to change, which is resulting from the change in the law. So in January 2018, the Zambia Revenue Authority implemented the tax invoice management system, what we call TIMS. This is a system to monitor sales transactions transmitted by the electronic fiscal devices in real time. The electronic fiscal devices, these are the gadgets that will be are operated by the taxpayers, and these devices are supposed to transmit real-time sales transactions to the authority, um, to this TIMS system. Then the implementation of EFDs is managed and enforced using Section 7(1) of the Value Added Tax Act and the legal provisions enshrined in the Value Added Tax, the Electronic Fiscal Devices Regulations 2020. The use of EFTs became mandatory effective 1st June 2020. We do realize that some taxpayers have actually not made an effort to fiscalize, but please be reminded and please be aware that this became law and effective 1st June 2020, all taxpayers who are operating VAT supposed to fiscalize. That is, they're supposed to acquire devices so that they can transmit their invoice or sales transactions in real time to the team, to the tax invoice management system. So that's the introduction. Then at the moment, there are three solutions that the authority has provided. The first one is the fiscal cash register, which we call the FCRs. These fiscal cash registers, I can say they are similar to, if you remember those people, if you had operated the actual conventional cash registers, um, these are similar to those, except these are electronic. This is meant mostly for small businesses, um, not those taxpayers who do not have a lot of transactions. They are normally the ones who are using these fiscal cash registers. Then the second available option is the electronic signature device. This one is normally used by taxpayers who have got mostly point of sale systems, and it's like an interface system between the point of sale and our TIMS system. So taxpayers who have point of sale systems normally would get this device, connect to their point of sale, and then they are configured and they can be able to transmit their sales transmission or sales transactions in real time to the authority. Then the third one is the virtual electronic fiscal device, which we call the VEFD, or the server-to-server integration. This one normally is used by ERPs and is similar to like SAP, like the one that is operating SADA. They are in this category. This one is an advanced integration, and we normally do recommend that this kind of integration might actually be better than the other two, because it takes care of the volumes and the speeds that are required for you to conduct your businesses. Then we want to say that it is important to note that approval of accounting packages and point of sale systems is a prerequisite to compliance with fiscalization, achieved through systems integration with ZRI teams. So what you are saying here is that for a system to be linked or to be integrated with our teams, the accounting package or the point of sale systems must first be approved. We have a number of items that's approvable, or that we check to make sure that the system meets the requirements, the controls, the risks not there. Then once that approval is given, then you can now proceed to do the integration of your point of sale systems or your accounting package with teams. On this one, we have a colleague, Madam Barbara Mpepo. She can talk a bit more on the requirements for the approval of these accounting packages. So I would request that you give permission. You can see she's not a part of the presenters, so if you can give her permission so that she can just briefly talk about this one. Madam Pepo, are you there?
Hello, I'm here. Thank you so much, Samuel. My name is Barbara Mpepo, as already mentioned, and I'm glad that the MD mentioned that it's very cold and we have to keep warm. I'm trying my best to be warm. Thank you so much. So to pick it up from Samuel on accounting package approval, basically this is happening from taxpayer services. And what we do here is when there's need for a taxpayer to integrate with the tax invoice management system, they fill in an application form for approval. And once the application form is filed in, we have to check it. But then there's a form that we provide to the taxpayer so that they can complete it. And this form is the one that we call a self-check form for computerized invoicing accounting package. It is called a self-declaration form. So on that form, there are a number of questions that need to be answered. And what we are trying to get from the questions that are given here is to try to confirm if the requirements that are needed on a tax invoice are met. So there are a number of questions on this self-check form. There are about 21 questions, and all of them must be answered. There are also requirements that need to be attached to this form. And just to go through a few of the requirements is that there must be an original copy of the invoice from the computerized system. There must be a duplicate copy of the invoice from the computerized system. A total of 9 requirements are required and all of them must be met. In addition to the a self-check form that is provided, we also require that we have a taxpayer details update form. This is required so that we can get updated information on you as the taxpayer. And we are looking at your contact details in terms of the phone number. We're looking at your email address. We're looking at your physical place of business so that we confirm with what is sitting on the system. This is all done so that whatever notification is supposed to come to you is received, and we ensure that the system is updated. So once the form is submitted with our office, we do the reviews, and if we are satisfied that all the requirements are met and the accounting package is satisfactory to us, then we give approval. And after approval is done, then the letter of approval is sent to our EFD team for integration. I think this is where I end for now. Thank you so much. Samuel, you can pick it up.
Okay, thank you so much, Barbara. Like we had put in the outline, so I'll now talk about the offenses and penalties that are available or that are there for this non-use of these EFDs. Once a taxpayer is registered and receives an EFD, it is a legal requirement to use the device at all times. Failure to issue tax invoices attracts a fine. Upon conviction, the fine is around 90,000 kwacha, and we can say in US dollars, it is about 5,300, or imprisonment, or both imprisonment and a fine. So these penalties, this is law, and a taxpayer who has registered and has got a device and they are failing to use, when we actually pounce on them, we charge 90,000, or let me just say 5,300 US dollars, and we have a graduation system. Maybe the first time that we pounce, it can be a fine. The second time can also fine, but the third time, we normally do not take fines. We will take the taxpayer to court for prosecution. Then secondly, offenses which include non-use of an EFD, entering false data on the EFD, tampering or manipulating information transmitted on an EFD, issuing false invoices, and malicious damage or opening of an EFD attract a fine upon conviction of up to 27,000 kwacha, roughly 1,600 US dollars, or imprisonment, or both the fine and imprisonment. Yeah, on this one, you will realize that the authority is the one that was giving out these devices, like for the FCRs that we spoke about, and also the ESDs, the electronic signature devices. So these devices property of the government, through the ZRA, and we do not expect anyone tampering with them, and we expect that they will be kept in good care and in good condition. So if we find anyone trying to open these machines or malicious damage, these fines will apply and normally do apply. Then on the last part of our presentation, we have one or two things that we expect to change because of the changes in the law. For now, I think those people who are aware, we had suspended enforcement, I think from last year, September. Now we're saying enforcement that was suspended will now commence following upgrades being done to the tax invoice management system. So what we are saying here is that the authority is undertaking some upgrades, and we are going to make sure that enforcement activities resume. So those who are not fiscalized, definitely they will be visited by the law once these new implementations are done. Then secondly, we are saying all tax types, not just limited to the current VAT, the tourism levy and insurance premium levy, will now be fiscalized. There is that proposal, and of course, and we are very sure that this will go through the legislation, and other tax types will now come on board. Other tax types such as probably turnover tax and others. So we are expecting quite a good population from our taxpayers. And please just be aware that it's time to start preparing. If you are doing any other tax types other than VAT, tourism levy, and insurance premium levy, it's high time that you started working towards this fiscalization. So we expect also our colleagues, our our partners, to also assist, especially those who are doing vending of the softwares and the devices, to assist in the enforcement and in the fiscalization space. So with that said, presentation NZM, we'll take some questions, and please feel free to ask any questions. Thank you.
Okay, thank you very much, Mr. Samuel, for that. I'll attempt to reshare my presentation before we go into a bit of a demo for this. Now, Mr. Samuel mentioned something very, very interesting. I don't even want to show my face anymore because he might pounce on me. He said, "It's 90,000 kwacha." I know what I would want to do with 90,000 kwacha, so I don't want to pay it to ZRA. But yes, and also thank you very much to Ms. Barbara Mpepo for that guidance on the self-check that we need to do. I think from that we picked up that there's two stages for applications. There's the self-check, and there's of course the form that is filled for taxpayer details at the end. So very quickly, I'll skip on some of the things that have already been touched on by Ms. Barbara and Mr. Samuel. And I just want to say that now the new structure with the reporting mandate that we've got, you can see on the screen, this is what it will look like, very schematically. You see, I'm kind of taking you slowly, so when you get there, you understand fully how everything's supposed to work. So basically, the integration that we need to do on any system is of the sales side. So your accounts receivable invoice and credit note. Those two are the main ones, the ones that produce this output VAT. So those ones create a sort of electronic VAT return. and then they don't need an accountant to upload them to ZRA. So everything happens in the background with these EFDs that were explained. Now, when doing it, to integrate your system, your ERP or accounting system to ZRA TIMS, you kind of need something in between, something that goes between your accounting system and the ZRA. And these are the EFDs that were explained, and of particular interest for us is the VEFD, the Virtual Electronic Fiscal Device. SEDO has made an implementation of this, and we have called it the SEDO Zambia middleware. So this is software that sits on your accounting software server or computer, where you integrate your accounting software into it, and then it takes care of everything with ZRA. Okay, so this is the platform. Now, one thing to note as well is that it can be adapted to work with any accounting system or point of sale system, not only SAP. So if you need it to work for your system that is a non-SAP system, we can still talk. However, all our integrations have been for SAP so far, even if it's capable of doing a bit more. Right, and I'll skip this because it's been elaborated already. The EFD really represents either a gadget or a software. And this is what it would look like. This is just a pictorial of what Mr. Samuel showed us or described to us, the fiscal cash registers. You might have seen these in some shops already used. They look like small calculators. And then you've also got the electronic signature device and of course the VEFD, which is of interest here. I like to call this generation 1 of fiscalization because, as you would know, with any technology, we have to expect an evolution of all of this over time. It's not a one-time implementation and then, you know, 1 year after that. No, it's not like that. Once you've done it, you're going to upgrades will come to your accounting system or to the ZRA team system. So over time, things would be changing. So what you need is to have something very, very stable in between these two systems to handle any issues, so that you are protected from that 90,000 kwacha fine. Of course, once you perform this integration, expect these changes and enhancements in future. So you have to think about that when you are implementing, as to who's going to be supporting it and whether you're going to have service level agreements. The VEFD shields you from the disruption of all of these upgrades and changes in systems, which attempts to do that. So it makes for a very stable environment. Now, when you look at these three different systems, you can see the first one, the FCR, is already built. It's plug and play. There's nothing else to do. You simply start using it. Works well in a low transaction volume scenario. So if you have a small store somewhere, you can use this, but it doesn't work well in a supermarket, for instance. It can't work at all, in fact, in a supermarket. The next one is that electronic signature device, which you plug into the back of a computer, an accounting computer. So it also works a little bit as a black box. That ESD device is really a small computer of its own, right? And it connects to the TIMS as well as to your accounting system. And it's easier to implement than the VEFD. It's cheaper to implement than the VEFD, but of course it poses challenges such as if you have multiple computers, you may end up having or needing multiple of these little devices connected. And if it fails and you've deployed this in a remote area, who's going to support it? Those are things to think about. The VEFD for us is our best bet, our best option. And we think that this has got the lowest total cost of ownership over time. It's got centralized management. And if you're going to keep adding terminals to your store, for instance, or your company, you can without incurring additional costs. So, and this is what makes it a very unique or very special way to do it. Of course, it also represents a single point of failure. If your VEFD software fails, then all your terminals must not be able to fiscalize when the system has run out of invoice numbers from ZRA. So something to think about as well. So at this stage, I will also hand over Mwaziona to show us, to take us into an SAP system and show us how this has been done, and show us what the Revenue Authority expects on a printed layout. An invoice that you print for a customer has certain features that it must have for it to be a valid tax invoice, for instance. And so I will hand over now to Mwaziona. Please take the presentation, Mwaziona, and share your screen.
Thank you, Mupota. Good afternoon, everybody. So I am just going to run you through some sample layouts and show you some mandatory fields that are required by ZRA in a fiscalized document. So I am in my SAP system at the moment. So I will quickly open an invoice, and I will show the layout, the print layout. So it is a mandate of ZRA that every invoice should be clearly labeled as tax invoice. And for the first time that you print it, it should actually say original. And ZRA also mandates that your invoice should clearly show your TPIN number and the TPIN number of your customer. Additionally, you need to show the fiscal information. So these are the fiscal data that are generated from the ZRA server. So here we have the terminal code, we have the fiscal invoice code, we have the fiscal invoice number, and the fiscal code. So these are actually generated from the ZRA server as the invoice is being fiscalized. It is also a mandate that you need to show your tax details on the rows. So here it actually states what the item is and the name of the tax code. Additionally, we have a section for the tax summary. So in here, it actually states or shows what your taxes were and how much tax was calculated on this particular document. And in addition to that, we have a section that actually gives you more or less a summary of the totals for your invoice. And at the bottom, if I scroll to the bottom, it is mandated that your invoice should actually show the date on which it was printed and the time. So I will just close this one and open a different invoice just for us to look at a different variation. So on this particular invoice that I'm opening now, so this is an invoice that was done in a different currency or an export type of an invoice. So this invoice was done in Zambian, in ZAR or Rand. So all the information that we spoke about on the previous invoice are pretty much standard, and they are on this particular invoice as well. So the only variation on this one is that for every invoice that is done in a currency that is not Zambian kwacha, you have to show your taxes in the kwacha equivalent, and you should also show the total in kwacha equivalent as well. In addition to that, you need to show an exchange rate, but otherwise, all the other details are pretty much standard for all the invoices. I will quickly run to a sample of a credit note. So ZRA actually expects that we have a credit note that is linked to an invoice every time a credit note is created, and that a credit note should actually clearly state that it is a credit note. And similarly, It also says that it's an original credit note, and we have all this information like the tipping for the customer, the fiscal data. So a credit note also generates its own fiscal data. But in addition to that, it gives you a reference for the original invoice that you are crediting. So in order for you to raise a credit note, you need to have had an invoice. Okay, so if you have a look here, all the other information is pretty much standard and similar to what we had on an invoice. So the only other thing is that for every credit note, it is expected that you should have a reason as to why the credit note was raised. So here at the bottom, or let me say on my last page of my credit note, I have this reason that says customer found it cheaper elsewhere. So this was the reason why this particular credit note was raised. So for now, I will hand back over to Mupota, but I will be back for another presentation.
Right, thank you, Mwazi. See if we can get this technology to work and reshare.
Hi everyone, Mupota's had a slight technical error on his side. He'll be back shortly.
Hey, I'm back. I don't know, the whole thing just went black on me. Let me reshare presentation. Hopefully this time it's going to work. Just give me a few more seconds as it loads. Okay. Now, hopefully you can all see my presentation. So, well, thank you, Mwazi, once again for that presentation. I just want to say that the fiscalization details that you were seeing there, all of them are going through that SAIDO Zambia middleware, which would also be provided by other dealers. It's not just us, it's not just SAIDO that does this. There are other dealers out there who represent different products. And having said that, our middleware can also work for other solutions. Now, you would still need something like your technical team to work with us to interface your accounting system to the ZRA using our interface. And so you would still need their support if you were going to use us. However, moving on, we have to think, you know, sitting there in that chair, you're probably thinking, do I make the plunge? Do we integrate? If you're ready to make the plunge, right? Nobody's ever ready for anything in this life, but sometimes we just have to do it. Again, it's just to realize that once you've done it, as you saw from Mr. Samuel's presentation, once you have done it, you can't really go back. And then you've got to think about a strategy for your rollout. And I think the rollout depends on your capacity as a business. Would you be using an internal IT team to do all of this for you? Would you be using an external team, or would you be using a hybrid? Okay, it just looks like I have lost my presentation. Not sure, Nick Hugh, can you let me know if the presentation is still showing or it's gone?
Yeah, we lost your screen. Just try reshare for us, please.
Okay. taking me back. Doesn't want me to finish, does it? Okay. All right. So I was talking about a strategy. These are practical considerations when you're thinking about fiscalization or migrating your system to a fiscalized state. As you could tell from some of the presentations, there was mention of the fines, there was mention of 21 steps or 21 questions that you have to answer in order for your system to pass this fiscalization. So I think at the end of the day, it's important for you to work with someone or people who have done this already, so that it becomes a lot easier for you. Now, I would say you should try and choose experience and capability much more than just price. I mean, if a system is very cheap and you get it, it might turn out to be very, very expensive for you in the long run. So I'll show you a little bit of a guide, a free guide we've put together that you can use as a shopping list. Have a project plan, and the project plan will do you good and help you get to the end for the migration. And also, this could also be a chance for you to have a sort of training or backup system that you can use for training, for onboarding new people coming into your company. Because as part of that project plan, we like to have a separate system, usually in the cloud, where we copy your productive accounting system and put it separately, and then do the development on there and integration and test and everything. So if you put it on the cloud, it's something you can control the cost, because you can turn the servers or cloud servers on and off. Okay, so this is what we recommend. And also, you would have to apply for enablement at ZRA. Miss Barbara, I think, elaborated on that. You have to apply for that enablement at ZRA, then they create or enable your tax account to enable this, to have this fiscalization going on. So then they will give some technical details to the technical team doing the integration that they can use for testing. So overall, what you're looking for is a project plan. In that project plan, you need to assemble a team, technical people, internal, external, some business people. You will execute things in a bit of a sane way. That way, if you create a development or test system, you get it connected with the ZRA through the technical team, and then the technical team will build or integrate against something that we were calling the ZRA user acceptance testing document. I think this is now being called the self-test or self-check that Ms. Barbara spoke about. It would be easier if you use a reference implementation, an implementation that's previously been done, particularly for your specific accounting system or ERP, if one exists. In all of that project, you should record all the steps that you take to do the integration and all the changes that you have made to your accounting system to make it fiscalize, how much time it's taken and how much it's cost you. And doing this in that project informs you on how to execute your project a second time, this time using what we call your productive system, which is your live accounting system. And of course, we expect the time and costs of doing this development on the test system is not going to be the same that you spend on a productive system. That is just going to be a rollover. Once you've done that, you're going to have ZRA inspect your test system when you are done for them to certify it. They have to approve the system, even if, for instance, in our case, we've already done the integration, we've already done the certification. Sure, it's an approved system, but they're going to do it again on your database just to make sure that everything checks out. Of course, it's going to be faster than a system that's never been done before, but they would still do it. An important thing is to decide on the cutoff date of moving from your legacy system, the way it is in its current form, to the same system being fiscalized. Now, some systems will allow you to use the same database, the same files and everything, and just have a cutoff date. Usually you would want it to be the first of the month. And some of them, who knows, you might have to re-implement another database in order to enable it. It just depends on your individual situation. Having decided on a cutoff date, you've got to realize you're not going to have parallel runs. I know people usually think that they can run parallel systems, but in this case, it wouldn't be practical for you to have parallel systems running, because which one would you won't fiscalize both. You have to only fiscalize one. After that, you would migrate then to the productive system in its fiscalized form, and then just make sure that the implementation considers that all transactions that came before that go live date still work as they were before, right? You're not going to fiscalize historical transactions. So these are the considerations that I think important to, if there's anything that you should take away from this session, it's supposed to be, I think, this one. Now, as a bit of an extension to that, I think you should come up with a scoring sheet when you're shopping around for systems or for VEFD software or integration software. Keep a bit of a score sheet and look at some critical elements that you need to score and compare systems with. All right. It's essential. Although you have to keep in mind that a lot of these listed things here are things that you used to do in the past prior to fiscalization in a manual fashion. So don't let it scare you. But what we've put there is a bit of an example of a scoring sheet, which we can give you. It's in a spreadsheet. This is what we have found in our experience are things to consider when you are comparing systems. And I've put an example there of three columns for 3 different systems. One of them says SAP Business One, and we show you how Business One scores in each one from 0 to 2. Okay, 0, 1, 2, and then you can add the other systems in there. Of course, you don't have to do it with Business One. So that's just an example. Some of the important things for you to look out for are, how are you going to fiscalize when the system goes offline? Because you've got to realize that an invoice you produce is not a valid tax invoice if it's got no fiscalization references on it. So if your fiscalization fails or there's no internet or anything like that, if you're unable to fiscalize, the requirement is that your system must fail to produce an invoice or a credit note. So it's something to think about, how your system is going to work in an offline fashion. How does it handle failures for fiscalization? Well, what's going to happen? Is there reconciliation that needs to be done manual? Is it hands-free? Is it automatic? Another very important point, the one on number 6, is validations before sending data in the background for fiscalization. We do a lot of validation in our implementation to make sure that we get as few errors as possible back from the ZRA server, because that becomes exceptions, and the exceptions need you to roll up your sleeves and have to do a lot of reconciliation work. So we make sure that any data that is not valid doesn't actually get sent, and we'll see it in just a few minutes. Think about also what happens when you're going to extend your accounting system. Some companies have an accounting system as it is in its standard form. Some start plugging in things. For instance, maybe an e-commerce shop that plugs into your accounting system. If you plug in these things and you've done your fiscalization with some middleware, is it going to take care of that? Are you going to have another project where you fiscalize those plugins? And then you have to think about what that integration enables you to use in terms of taxes. If you are enabled for all of those tax types, then does the integration cater for all those tax types? In our case, Business One does all of them except the tourism levy. That's the only one that we haven't implemented because of some testing that is still going on. Otherwise, all of the rest of them are implemented. Think about forward compatibility. In other words, if you have an upgrade or an update for your accounting software and you apply it, will that fiscalization still work? Who's going to support that? One other thing I think to get is the user acceptance test report for an approved system like Business One or other systems. As you are investigating them and comparing them against one another, ask for this report, the user acceptance test report from the ZRA. This would have been done in the certification process. So you can see if there's any failures or if there's any special way in which that system handles particular scenarios. And they should all have those ones. And most importantly, are you going to have a service level agreement or a support contract with whoever the vendor is for that VEFD implementation or the integration? This is something to consider because you are going to encounter issues. These are things that are going to be working on a daily basis, taking your transactions and reporting. Failures are bound to happen. Who's going to support it? Is there a big requirement for user training when you integrate or not? Is it user friendly? Does the user need to know that fiscalization is even happening? And then I think also something that we haven't spoken about is the cost. What is the cost over, say, 3 to 5 years when you compare these systems to one another? Right, so it's an important question to ask. Okay, so how Sado does it? Very quickly, we create a testing system in the cloud, copy your database. That's if you're already using Business One. For instance, we copy your database, we put it in the cloud. We do all the administrative procedures with you at ZRA to get you enabled, and then we do the technical implementation. We do integration testing with ZRA. We hand it back to you. You do what we call key user training. So you get all of the key users to get familiar with how fiscalization works and what to look out for. And once you're done with that, you have a user acceptance test with ZRA. When they're done with that, they give you a green light to go ahead. Then you can migrate that test system into your productive or live system. We can do this in as little as 6 man days for a simple implementation, or it can be more days. It really just depends on what kind of customizations or how you use your system that you have. So shortly now, you're going to see, I'll hand back to Mwaziwana, who's going to show you very quickly how the fiscalization actually happens on a transaction. It's going to be very quick, but before you go there, it's just some background knowledge about Business One itself, which is the system you're going to see, is that it's more than an accounting system. Well, of course, at this stage, we're talking about accounting, but this system can take care of more areas of your business than just accounting, all of your different departments in one system. So this is how it works. And then, you know, in a little bit of an expanded fashion, those are the core features of the system. Those bounded boxes that you are looking at, those are the things that those are the features of the system that were attached in the process of us performing this integration with ZRA. So you can see it's not a major integration when it comes to when looking at it from an SAP Business One point of view, because of the rest of the features there, but also it's because it's more than an accounting system. So a lot of those features are not even accounting. They form part of other business units, for instance. So at this stage, I'd like Mwaziwana to just show us, go back in the system and just show us, 1 or 2 transactions that are actually in real time fiscalizing. Mwaziwana.
Thank you, Mupota. I will share my screen again. All right. So I will quickly go to my sales module and create an AR invoice. So this is my AR invoice window. So I will just select my customer. And I will select the items that I want to add on my invoice. I'll select these 2. And as a user, so maybe let me just activate something here quickly. So just pay attention to these fields on the right-hand side. So as a user, I've entered this information and I will just post my document. So there, my invoice has been posted successfully. and it has actually brought back this information from the ZRA server. So this happens in just a matter of a few seconds. So the system has actually been configured such that it is able to trap any errors. So if I actually tried to create another document, and as a user, I maybe try to tamper with some information, like for instance, if I select an item, or I will actually select the same items that I selected, but if I try to, let's say for instance, maybe change a tax code for any one of these, maybe select that particular one. So if a user tries to post this document, if I come to the bottom here and post my document, you will see that the system will actually block the creation of this invoice, and it will give a message at the bottom. So here it's actually telling the user to say that tax code 06 is invalid for local customer. So it actually tells the user what the problem is in such an instance. Okay, so therefore the fiscalization actually asks for us to actually put in a lot of validations in order to avoid posting documents that are not fiscalized. In the case of a credit note, it is a requirement by ZRA that every credit note should be actually linked to an AR invoice. So I will come to the invoice that I had created earlier and come to the bottom. I will click this little button that says copy to AR credit note, and it will automatically copy across all the information that I had on my credit note or on my invoice onto the credit note. So the only thing that the user needs to do in this case is add a reason code, because you need to put a reason for cancellation. So in this case, maybe I'll say duplicate invoice, and I will give a remark. So maybe I'll just say duplicated. And then I'll come to the bottom and post my document. So there we go. So in just a matter of a few minutes, I've been able to create both an invoice and a credit note. So even the fiscalization, even though it's going to the ZRA server to actually get the fiscalization references, the user will actually not even notice because it's very, very quick. So maybe the last thing that I'd like to show is that once I come here and show the relationship map, so SAP Business One actually shows you that this particular invoice was linked to the credit note. So I can simply double click to go back to the AR invoice that was the origin of this particular document. All right, so that's the end of the very, very short demo. At this point, I'll hand back over to Mupota.
Thank you very much, Mwaziona, for that. That was quick, and I think I hope that everybody caught something out of that. So at this stage, I would like to invite everybody to this Q&A session. I think some questions have already been posted in the chat section, but if you would like to ask a question, I'll ask Nick here to kind of guide us on that. And once we're done with the Q&A session, I think we'll be able to close the webinar. Nikhil?
Thanks, Potter. So the first question we had was from, just give me a second, I'm just scrolling up here, was from Yoram Sinyawe. You wanted to know, he did say, thanks, our business doesn't remit VAT. Do we still need to have the POS registered with the ZRA?
I think that would be a question for the ZRA team. Maybe someone,
Okay.
maybe Mr. Samuel can answer that.
Yes, I'll take that one. First, I think we need just a bit of clarifications just to know the tax types for which they are registered. I don't know whether you have those details, but if you don't have, I would guess their question is asking, or I would assume they are not registered for VAT. So maybe that's why they don't do the remission of VAT returns. But if they are not registered for VAT, yes, for now they are not supposed to be fiscalized. But however, like we had said that we are doing some upgrades and there are these proposals to a change in the law. So almost all the tax types will come on board, including turnover tax. So if they are not registered for VAT, I would guess they are under turnover tax. So if they're under turnover tax, maybe I might as well start making steps towards the fiscalization. So that's the answer that we can give. But of course, there will be further guidance from the ZRA on the tax types that will come on board. Of course, that requires to pass some more regulations or laws, and that definitely at an opportune time that will be announced. But there are those proposals, and I want everyone to know that there are those proposals in this space. Thank you.
Thank you, Mr. Samuels. The next one we had is from Ann Banda. They would like to know, how is input VAT accounted for on the V-EFT system? Do we do a separate return for it?
Sorry, maybe you can just repeat the question.
So Ann Banda wants to know, how is input VAT accounted for on the EFT system? Do we have to do a separate return for it?
So I think she was referring to the input side for things like purchase invoices, purchase credit notes. Since those are not going through the VEFD system, would they then continue to submit their returns as they used to do on Tax Online for just those, excluding the sales side? Mr. Samuel, maybe you can come in again.
Okay, I can take this one. Although the question is not very clear, but okay, I can see it here saying, how is input VAT accounted for in the VFD? Do we do a separate return for it? Okay, I would say maybe they meant that once you are fiscalized, then you don't need to submit returns. If that's the way the question, maybe I can understand it. No, actually, if you are fiscalized, you still need to submit your returns, your VAT returns, but we are doing these same upgrades, like we said, on our teams, such that the information that is transmitted to our teams will also auto-populate onto your returns so that it helps you, or it helps the taxpayer to verify and validate before they can actually file the returns. We do note that when you are having your sales and this information is transmitted and sitting on our server, when the time to submit the return comes, again, you have to download that information and then start compiling these schedules and then finally submit your return. But we are trying to make the upgrades so that that is also like an automatic thing, which allows you at least to have this information auto-populated onto the return schedules, and then all you do is you add any other information or any other invoices or any other sales that you may have done outside the system, and maybe validate and then finally confirm and approve. That's when you submit the return. I hope the question was along those lines, that is there a requirement still to submit returns even if you are fiscalized? Yes, there is still a requirement to submit returns. Thank you.
Thank you, Mr. Samuels. The last one is, what is the deadline, or when is the deadline for fiscalization?
Okay, like I had said in the previous slides, the deadline is already passed. Actually, this was 1st June 2020. That's when it became law. When we started, we did a bit of enforcement, but yeah, it was we had to suspend this enforcement sometime in September last year. There were 1 or 2 concerns, especially that you remember we are saying that at the moment the authority is the one that has been giving out these devices. So when we ran out of the devices, it became a bit tricky because you find taxpayer one has a device, the other one doesn't have, because we are not able to give them the devices. So in that space, we said, no, okay, let's just hold a little bit with the enforcement until we make sure that we provide all the devices that are required to all the taxpayers. That's when we will resume. And further, remember I said that we are doing some upgrades on our system teams. So we want to make sure that those enforcement modules also are on our systems. Unlike the way the things were happening, the enforcement normally would just be like a manual. When the officers go there, they will do manual forms, but want all these things actually to be, the entire enforcement issue to be computerized. So once these upgrades are done and we are able to provide all the taxpayers with the devices, and then like I said, maybe we are also looking at situations whereby there will be more options for a type of gadgets that taxpayers can acquire. Once all those things are done, the enforcement actions will definitely commence, and there will be no segregation, because all these things will be available to just help the taxpayers to acquire them, and we'll make sure that everyone who's supposed to be on the fiscal space acquires those devices and comply. Thank you.
Thanks, Mr. Samuel. To all attendees, thanks for joining. Is there any additional questions? Your mics have been activated, so if you'd like to ask anything, you're welcome to unmute yourself and let us know. Hi, Edith, do you have something you'd like to ask us? Edith, are you there? We can hear you.
I think she probably cannot hear us, or perhaps the problem with the mic there, Nikhil.
Yeah, it might be.
Maybe we'll invite her to maybe just send that question directly to us after the webinar. We can perhaps get in touch with her.
Yeah, sounds good. Edith, you're welcome to pop us a message in the chat box, or just send an email directly to me, Nikhil, and we'll get a response for you.
Okay, Nikhil, looks like there's not any other questions, and we've already consumed everybody's 1.5 hours of time. So in the interest of that time, and also in the absence of any other questions, And I know some people are still thinking about it, and you might have a light bulb moment after the presentation. You're welcome to still get in touch with us, and or we can channel your question also to the ZRA EFD team as well after this. And I think you have all of this in your emails, a way to get back and get in touch with us. We'll gladly follow up with that. So I suppose at this stage, I would like us to move to closing the webinar. First, I would like to make special thanks to the German Chamber of Commerce and Industry, and in particular Nikita and Rene, for working so hard to organize this event, a very, very important event in my opinion, as well as our team at SEIDO, Elaine, Nick Hill, and Memory for making everything possible and getting everybody to attend as well. This is it's been a lovely experience for me. Thank you very much. And if you have any way that you would like us to help you with the migration, please get in touch with us. You can ask us any questions, and we'll be glad to answer those. And so at this stage, I will move to close the meeting. You please feel free to disconnect. Otherwise, have a lovely evening, and thank you very much for your time. Bye-bye.